Cool. Alright guys, today, first of all, welcome back to another video. Today we're going to be going through the Fibonacci retracement tool over here on the left hand side. This video is pretty much just going to break down how to apply it to actual trading scenarios, how to draw it properly so you get accurate levels. I'll go through the two variations that I use and the levels that I use, and then we'll put it into practice a bit. So we'll go through a bit of back testing and aligning confluences with the Fibonacci levels to snipe entry points. All right guys, cool. So laid out in front of us are two iterations of the fib tool. Well, I guess first of all, if we go to the left hand side, there is way too fucking many fib tools that people can use. Me personally, I just stick to the retracement, and with the retracement we can do lots of things with it. All right, so this one right here is going to be the default template that TradingView gives you, and it looks like shit. There's a lot going on here that we don't necessarily need, and there's a lot of noise. All right, and then on the left here we have an iteration used to measure moves in the market, right? So it's a standard deviation tool. So it essentially measures the initial price leg and then doubles it and then 2.5 multiple to find price targets. That pretty accurate. And then this next one that I'm drawing out is my refined version of the left here. So it filters out all the noise that the default template gives you and hones in primarily on signal. All right, so we can scratch this, and the two that we'll be focusing on today are the standard deviation template and then the retracement template. All right, so standard deviation template, we'll go into the settings here and then we'll highlight the key levels in standard deviation. Okay, so if you can see, we can tick off everything except our 0 level if you like. Our 1, these are kind of our baselines, so it just shows kind of the price leg that we're measuring. And then the deviation levels, 2.5 and 2. The rest of the settings down here. Cool. And now we'll move on to the retracement tool. All right, so if we remember, the default setting looks horrendous. Okay, so here we've filtered out the noise and left in the key levels, that being 0.5, 0.6, and then 0.78. These become high probability areas in the market when you're measuring retracement. And then in terms of the color scheme, it's the same. It's all yellow. We just filtered down, or I guess filtered up as the probability increases. 7.8 being the golden level. This is where institutions like to place orders when they're playing retracement games. This is just my setup. Very minimalistic. All right, now we can go through some application, and I can show you guys how to apply it for accurate levels. So the best way we can go about this is going from either swing high to swing low or swing low to swing high, depending on whether you're looking to long or short. All right, so in this case right here, we'll put the start of it at this swing low, So if we go into a 4 hour, we can see it better. This right here, the swing low point of that wick, and then we pull it all the way up to a swing high, right? So this bit right here in the market, swing low to swing high. If we're going long, it would be swing high to swing low. And we can get high quality short levels there. Okay. So real quick, swing high to swing low. Sorry, swing low to swing high. Lands us at the 0.6 level. I'll just give you an example here. Stop just below 0.78. Price target, targeting recent highs. Keep in mind this is 4 hour. So again, the higher time frame, the higher the probability. You know, when we're going. Notice we wick this level again, which shows the strong support it has. And then bang. We can look at applying a standard deviation measurement too. Alright. So let's find an example. So just quickly here, guys, I want to show you just one more example of the retracement tool. Okay. And so this time we're looking for a short entry here. Okay. So we took the swing high and we pulled it down to the swing low. So we have price push up. And now, since we're in such a critical zone of the retracement, I would be looking to take a short anywhere in this range. And if we're really onto it, right, stop above 7.8 level. And notice we wick it directly. And then we begin to displace. Alright, and now we can incorporate a standard deviation. So if we remember, standard deviation is simply just measuring a price leg and multiplying it by 2, right? So price leg and then another price leg, and then that's where we expect price to go. Okay, so we can go 1, 2, 3. These 3 green candles right here can be our price leg. Swing low to swing high. And now we have a high probability price target area. Let's see how this plays out. Boom. This is why I can't stress this enough, guys. If you see every time we pull up, these retracement levels are so strong. And if done right, the standard deviation price target is very accurate, right? You notice we hit the 2.5 level. And let's see what happens when we hit the 2.5 level, right? Everybody's out, and then people can now go long. Put the cherry on top. We can add some confluence to find even greater probability retracement areas. Okay. And to do this, we layer them with fair value gaps. Okay. So fair value gap is simply if we have a green candle from the wick, another green candle, and then from the wick of the third candle. And all that open space becomes fair value, right? And the same thing can be said for red candles. But this video is not on fair value gaps. We're focused on retracements. So if we layer the fair value gap with a retracement is automatically becomes a higher probability. So then again, we'll be looking for price to enter our area, and it did. It's clicking too fast. We can buy it here, and we're golden. All right, so just to recap, retracement, swing high to swing low to swing high. It measures the discount of a price leg. Whereas standard deviation, again, swing low to swing high to swing low, measures the projection of the price leg if price continues in that direction. Okay? Cool. So, hopefully you guys learned something there. As always, leave a like, leave a comment, subscribe if you're looking for more educational content, and I will see you guys in the next video. Peace.